Hi. Well, you can't really talk about the future if you don't understand the past and the present. So that's why today I'm not only going to talk about the future, but I'm also going to talk about the past and the present. So let me start with my story of the past. Well, my story of the past actually starts with a money transfer that I wanted to do about 20 years ago. And so I don't know about you guys, but at that point in time, money transfers, they were very expensive. So they took a lot of money to get money from one point to the other, 7 to 9%, and it also took a long time. But what was funny with my payment is actually that it got lost. And I thought, how can a bank lose my money? How can a bank not know where my money is? So I went to see the guys at the bank and I say, hey, what's the story? Explain this to me. And they came to me and they said, well, we're going to look at it. And what they said was, it's in the financial system. And I thought, what's this? It's in the financial system. What kind of explanation is that? What do you mean it's in the financial system? And they said to me, well, the financial system, that's like a black box. We know when we enter the payment, great, and we hope and we pray that one day it will pop up on the other side. But we're actually not sure because we don't know what's going on inside. And I thought, well, you guys are bankers. How is it possible that you don't know what's going on inside? So I was obviously curious and I wanted to learn more. And so there's actually 3 things I learned about this financial system. So I went to see the guys at the financial system, 3 things I learned. Now, first thing I learned, the banking environment is silo-based. Look at this, silos. And there's not just one payment, there are all kinds of payments in the bank. There's international payments, domestic payments, credit card payments, debit card payments, you name it, they have it. And each one of those payments is run by a director. And this director is responsible for his silo, so he must make sure that the payments are done properly. So he buys hardware, software, all of the stuff you can imagine to actually make his thing work. And his neighbor, who's responsible for the same stuff, but not, well, also for payments, but not the same payments, has bought also that, but different technology, different hardware, different software. So you have all these systems next to each other, all pretty much doing the same, but all different. And so in a bank, for instance, you can have 17 or 18 settlement systems, but they pretty much do all the same. And so the second thing I saw, that each of these silos, as you see them here, also has a database on it. And so the silos have a separate database, so the data is spread all over the place, and these databases are pretty cool, because they stand somewhere in a cellar, literally in a cellar, and there's this old guy, 70 years old, that has to take care of it because he's the only guy who can actually program into these databases. So it's pretty cool. Now the third thing I learned is that if you look at these silos, silos is one thing, but you also have channels in a bank. And the channel in a bank is how do you get in touch with your customers. And so you have a branch, you can have customer contact with through the internet, through mobile, and so on. And so every one of these channels has to be connected with the silos. And so this is what I call one big spaghetti. And that's what I saw. And I thought, well, this doesn't make any sense. If you want to do this rapidly, real time, you have duplication, you have spaghetti. How on earth are you going to do that? And as a very good, well, Flemish guy, I just went to the pub with my friends and we had some drinks and beer on it. And we said, well, we need to find a solution for this. And basically, this is the solution that we found. And it's actually literally drawn on a beer card. And as you can see here, you see in these international payment silos, you see all the duplication of these processes. So again, it's not rocket science, but we basically took out all of these common parts and we build them once into the payment layer. So you basically get rid of your duplication, you build it once, you get rid of your spaghetti because the front end and the back end of a bank is now talking with each other, and you put it on a centralized database. And that's pretty much what I've done, together obviously with my team. In 2001, we started the company. It was out of Belgium. We had 40 of the top 50 banks as clients, also the Federal Reserve, Bank of China, central banks were using the system. And I have to say, I mean, I had a splash. I really enjoyed it. I had a lot of fun, and had so much fun that I actually would like to try to do it again, but that's a different story. So now let's move to the story of the present. Now you all know, pretty sure you read newspapers, that you know that banks today are under threat by the technology companies, by the smaller ones and by the bigger ones. You see them there, Apple, Google, Facebook. You have some of the smaller ones, which are already big today. But anyway, banks are under attack. Now, it's very clear today that it's much easier to actually do a startup. When I started my company, I needed $5 million in 2000 to actually get it up and running. Today, you only need $5,000. And why is that? Because the infrastructure cost to do this is much cheaper. You can have everything now in the cloud and all of that stuff, which is kind of cool. And so that's basically the situation, that you have much more starters, and with the same amount of money in 2000, you can have now 1,000 times more starters. And what's the effect of that? Well, look at this. This is actually an internet bank application site from HSBC. And you see that each one of the services that the bank has, there's some starter that actually does this service. So you can basically, if you look at it, create your own bank. If you would have them all together, you could create a cool bank, but that's not the purpose here, but that's the point. Now, if you look into these tech companies, there's a couple of things that they have in common versus the banks. And there's more, but I would like to just pinpoint 2 out of them. The first one is the tech companies, they work real time. They eat, drink, live, do everything real time. And real time, I think, is important. And I see that with my son. My son, Timon, he's 12 years old. Every month, he gets his allowance from me, and I take my PC and I send it to him. And every month, every single month again, what he does is 3 seconds later, he takes his mobile phone and he says, "Dad, where's my money?" I said, "Guy, I just sent it." Instant satisfaction. When I look at when we were younger, when we wanted to do something on the PC, we had to take the PC and then plug it into a kind of telephone line, and it made some funny noise. And then after a while, we got something, but we were used to wait. Young guys these days, they don't wait anymore. The millennium, they want to have it right now, immediately. And I think that's something that banks have underestimated and where technology companies are very good at. The second thing is data-driven. Tech companies are data-driven. They use the customer in the center of things. They want to know everything that's to know about this customer, and they want to provide the right product at the right price at this customer. That's also, by the way, one of the reasons I get these emails from Bol, but I don't open them, bol.com. I don't open them anymore because every time I open them, it costs me €100 because they always seem to be getting the products that I want. Anyway, what about the banks? Well, I can tell you, the bank industry, not real-time, not data-driven. Now, that's today. You can ask yourself the question, which I do, why is that? Why is a bank not like a tech company, data-driven, and so on? Well, ladies and gentlemen, the reason is, again, the infrastructure. Banks today, they lack the infrastructure to work and act like a tech company. And let me take you back to the drawings that we had. So this was what we saw. Here you have the payment silo, which we had with Clear2Pay, which we basically solved because we built this payment layer and got rid of the spaghetti. But guess what? There's better news in a bank. There's not only payments in a bank, there's so much more in a bank. There's mortgages, there's insurance, there's securities. And you as a customer, you can be sitting in each one of these silos. And so you get more silos. But not only more silos, but also duplication of data. So you as a customer, you can be sitting in one of these databases with different addresses all over the place. It's a bit of a mess. So guess what? There's more spaghetti, even today. Now, what's the story then of the future? So let's now move into the story of the future. What's the future? How can we actually solve this? How can we go from something that's vertical into something that's horizontal, like we did with Clear2Pay? Well, we have to think, in my opinion, like a lasagna. And what I mean with that is that if you look into this slide, you see actually the payment layer, again, what we did with Clear2Pay. And normally, you should just do the same thing like we did with Clear2Pay, but not just on the payment silo, but over the bank as a whole. And basically build a kind of glue that glues the front end with the back end, and that comprises all of the data, and that's built with new technology. And guess what? I'm a big believer, and I don't think that each bank themselves should have their own layer. Why shouldn't banks, Belgian banks for instance, work together to build a layer like that? Now, what's the advantage to have a layer like that? The advantage is that you can have all kinds of apps being built by technology companies that can be plugged in real-time directly on that glue, if you will, and be interacting with the bank. Let me give you a couple of examples real quick. Let's say you're in front of a house, you want to buy the house, take a picture, Google says it's here, you get all the information, house has been sold. or bought 3 years ago at this price. Houses in the street are these prices. If you want to see, you can get all the plans from the cadastre, real time, and you can ask real time for a loan and for insurance. Kind of cool. Or maybe another app, we all pay Social Security contribution, well, at least I do, and I'm pretty sure you guys do as well. But the problem is you pay all your life and you don't really know what's going on. Wouldn't it be cool to have an app that actually collects all of that data real time, and every single day you can just push a button and see, okay, how much am I gonna get at 65, or how much do I have to save extra, or maybe I can take an insurance to make sure that I get the right money at 65. Anyway, there's hundreds and hundreds and thousands of apps that you can build. Banks can do that, but also technology companies. Now this layer actually allows, in a way, banks to work together with tech companies and create an ecosystem. And I'm a big believer in ecosystems, that things will be built together by different parties. But in that ecosystem, in my opinion, every single party has to do what he's good at. You don't have to do anything else that the other guy is good at, you have to do what yourself are good at. And this, in my opinion, is not something new. It actually has been created by a guy called Ricardo. It's a law of Ricardo in economics. And the guy was living in 1800, and he basically was living in the UK. And he saw that the UK used a lot of the capacity to build wool. They have sheep, and so they made wool. And they also wanted to have some wine, but they didn't know how to do it, so they used some of the capacity of the country to make wine, but very inefficient. And he saw that the French were actually doing the same, but the opposite. They were making wine in an efficient way, but they also needed wool, so they used some of that in an inefficient way. And so Ricardo said it doesn't make any sense. In fact, you should have the French making only wine, and the English only making wool, and they should trade, and society as a whole will win because he will have more wine and more wool, and so everybody will win. And that's the law of Ricardo. And in fact, I'm a big believer of that law, and that should, I think, be something in the future that banks and technology companies should work on. Banks should focus on what they're good at. And whether you like it or not, banks are very good, in my opinion, at know your customer, KYC, at compliance, at trust, at security. These are the things that banks are good at. They've done that for ages, they know how that works, and they also know to deal with a lot of paperwork, especially on the compliance and on the authentication side. Tech companies are very good at technology. They're very good at building cool products rapid deployment, and all of that stuff. And so in a way, these guys have to work together. So I have 3 takeaways. First, banks have to rethink the pasta, and they have to work in layers and make a lasagna. 2, once they make the lasagna, they have to share it and create an ecosystem. And 3, you have to focus also in life on what you do best and really be the best in that. And of course, you have to remember Ricardo. Thanks.